Hey guys, I wanted to share something that frankly you probably never heard of before. Of course, we're crowdfunding lawyers. We're focused on securities and investment offerings. And traditionally, you were doing one deal at a time. And the SEC, the state regulators, they used to look at whatever you were doing and put it all together. We called it integration. And then after saying, well, you're doing this, that, and the other, have you violated any securities laws? Something brand new. You're only allowed to do it now. Before 2021, it was not possible, but you can run multiple securities offerings simultaneously. That allows you to really just change the game. We call these the side-by-side investments. And just to think about, if you're allowed to advertise, well, now you can advertise and be able to direct investors to the type of offering that is suitable for them. So as an example, we've got the Reg D Rule 506 rules that allows for you to advertise webinars, seminars, social media, email blasts, newsletters, all of the above in order to find verified accredited investors. What you may not have heard of before is regulation crowdfunding. What that allows you to do is still advertise and market absolutely everywhere, but now you can accept the other 90% of America. Yeah, you can bring in absolutely anybody as an investor, an unlimited number of these investors, so long as they meet certain maximum investment requirements. And there's, of course, a bunch of process behind it. So here's the secret of true crowdfunding. Now, all of a sudden, you can put together your investment. And in real estate, it can be expensive. But if you think about it, if you're raising 10 million, 15 million, how much easier would it be if up to $5 million of your capital came from non-accredited investors? It just opens up the doors to so much more opportunities. Now, there actually is another type of side-by-side offering. It's doing a Regulation D 506B side-by-side with a Regulation D Rule 506C. Now, all of a sudden, you can get up on stage, talk all about what you're doing. You can't have to just keep it a secret because of these general solicitation limitations that apply to the Regulation D Rule 506B. There are still some requirements there, and it doesn't change the requirements of these offerings, whether it's a Regulation D, Regulation CF, or even Regulation A. So just to kind of dive in a little bit deeper, and I'm assuming that you have some base knowledge, advertising, it means general solicitation in the legal world. But at the end of the day, it's just letting the world know what you're offering as an investment. Now, it really just kicked off in 2012. Never really allowed before. We start with the Regulation D, Rule 506C, that allows you to advertise and generally solicit as long as you're only bringing in verified accredited investors. An accredited investor, they're the high net worth individuals. They've got net worths of $1 million or more, not including their primary residence, because let's be honest, everybody in California would be accredited. Or they're making $200,000 per year, technically the last few years, and still expecting to make it. Or with their spouse, they're making $300,000 per year. Those are the primary categories of accredited investors, but there's a whole host of other options. Make sure that you're working with an attorney that understands what those different strategies and what it takes to be able to verify the accredited investors, because now they can all invest, whether you knew them or not, into your Reg D Rule 506C. A newer exemption that frankly was barely used before 2021 because it was only limited to $1 million raise, way too small for the amount of work that it took. Regulation CF, We literally call it regulation crowdfunding. Similar in that you're allowed to advertise, but maybe accredited investors are 10, 15% of America. Of that, maybe 5% are in fact investing into these private investments. What about the other 90%? Now, regulation crowdfunding is where now you can accept absolutely everybody. The weird limitations are they can only invest up to 5% of the greater their net worth or income if either of those are less than $124,000. But if they have a net worth and an income of greater than $124,000, now they can invest 10%. So as an example, if somebody has a net worth of $500,000, but they're retired, no income, they can invest up to $25,000. Same example, but now that $500,000 net worth, they're working. They're making $125,000 a year. Now, all of a sudden, they're allowed to invest up to $50,000. Just as good as any of the past investment strategies, but all of a sudden, you're casting that wide net. Now, I want to bring up the last option. And frankly, because of the ability to run both the 506C as well as the Reg CF, allowing you to raise as much as you need with the limitation of up to only $5 million going into the regulation crowdfunding offering. We do still have the Regulation A that allows you to raise, up to $75 million, a big chunk of change. From absolutely everybody in America as well, they're just limited to 10% of the greater of their net worth or income. More often than anything, we're leveraging these Regulation A offerings as a mini IPO. It's a baby step towards listing your company with a national stock exchange. Alternatively, we'll do these as REITs or series offerings. What I mean by that is you're taking that $75 million and you're chopping it up into bite-sized bits. So example, if you're doing a $10 million multifamily or commercial real estate raise, now all of a sudden you're not capped at that $5 million in non-accredited money. Now you can raise up to $10 million from non-accredited money, and you still have another tranche. You can do 6 $10 million tranches and the $15 million. Long story short, you can take that $75 million and break it up into as many separate investments as you want. So I do want to bring this up because it happens pretty often. These concurrent offerings have not changed the fact that you are not allowed to advertise the Regulation D Rule 506B offerings. Nothing changes here. However, if you are doing the Reg D Rule 506C, you're allowed to advertise that. You're allowed to accept verified non-accredited investors that you found through your advertising. With the Regulation D Rule 506B, you're limited to investors that you had a prior relationship with before you ever started your advertising campaign. So it doesn't change the fact that you're not allowed to advertise the investment. It doesn't change the fact that there are limitations on the amount that non-accredited, sophisticated investors can contribute, but you're at least able to run them simultaneously. And we've been doing it for quite a while where you're doing the Regulation D 506B, then you close it. And now you open up the Reg D 506C. Well, how much better would it be if you could get up there on stage, do your webinar, and now you can accept your best friends from the years past? These are very technical rules. You got to make sure that you're getting proper guidance and proper planning. We'd love to help you over at Crowdfunding Lawyers, but the most important thing is that you're taking the time and getting the guidance to ensure that you're doing everything right. If you'd like to get a little bit more information, go ahead and check out this website to be able to download some helpful charts and just really good information that will get you on the path to putting together your business or real estate investment or your fund opportunities, whether you're investing into options or crypto or real estate. There's a ton of different strategies to use. And here's your first step to understanding some. I cannot stress enough, just make sure that you're working with those that know and have been there and have the experience to help you be successful. And good luck.